Welcome everyone, and thanks for joining us for today's presentation about keeping your MAS contract compliant. This training will be recorded, and the slides that we're presenting today will be shared with all of the participants after the presentation. You should receive the slides in an email sometime in the next 2 weeks. If you are uncomfortable with being recorded, that's okay. You can drop off and watch the presentation at a later date. Before we get started with today's presentation, I also want to let you know that there's a closed captioning feature available to you. Located at the bottom of your screen, you will want to look for the CC button, and you can click on that for a transcript if you need it or would like to use it. Next slide, please. First off, I want to introduce myself. My name is Valerie Angel. I am a branch chief and contracting officer in Contract Division 5, and I am based out of the New England region. I work on the ITC schedules program, and I have experience as both a contract specialist and an administrative contracting officer, or an ACO. Next slide. Here is our agenda for today's presentation. We'll first go over some background information, like the schedule offerings and all the different categories that are on schedule. We're going to talk about what's offered on the schedule and just have a high-level overview. I'll also give some insight into the GSA personnel that are assigned to your contract and their different roles and duties, so you'll know who to contact if you have any questions. Next, we'll go into an IOA compliance assessment and what you can expect if your contract has an assessment. And then we'll delve into your compliance responsibilities as a vendor, and we'll look at some significant terms and conditions that you want to be aware of. After that, we'll discuss modifications, and I'll share information about how to update your contract's point of contact. And finally, we will have time for questions at the end, so we'll have a question and answer session. If you have a question during the presentation, I would ask that you please type it in the Q&A pod, and we will address it during the Q&A session at the end. If your question refers to a specific slide, please include the slide number in your question when you type it in. Next slide. All right, so here we have the list of the 12 large categories that are offered on GSA. You'll note that with the mass consolidation, which happened just a few years ago, the previous 24 separate schedules have been distilled down, and they are now combined into 12 large categories, which are listed here on the screen. I'm not going to read them all out, but you can read them to yourself. There's also a link at the bottom of the page that will take you to GSA's MAS scope and templates page, and it will give you an idea of all the available offerings on the schedule. There's more details on that website if you want to check it out on your own. Next slide. So next up, we're going to talk about GSA personnel. There are 3 roles for GSA personnel on each schedule contract. There's the PCO, the ACO, and the IOA. Next slide. So first up, we have the PCO, and as you can see, that stands for Procurement Contracting Officer. They are also referred to sometimes as your contract specialist. They're going to be the GSA representative that you're probably most familiar with at first, because they negotiate and award your contract. So they negotiate your offer with you when you first submit it. The PCO approves most bilateral modifications, and this includes addition, deletion, and price changes for modifications. And the PCO has ultimate authority over the contract. If you're wondering who your PCO is, you can visit the Vendor Support Center, and they do have a PCO locator. If you go to the main homepage of the Vendor Support Center, just scroll all the way down and you can find it there. Next slide. Next up, we have your ACO, and that stands for Administrative Contracting Officer. And your ACO will be assigned shortly after your contract is awarded. And in some cases, this may be the same person as your PCO, but sometimes they're different as well. Your ACO is delegated specific functions by the PCO. And so these specific functions are they monitor sales reporting and industrial funding fee remittance. They monitor compliance with subcontracting plans and associated subcontracting reports if that's applicable. Your ACO will award your subcontracting plan modification if you have a commercial subcontracting plan. The ACO also monitors compliance with mass modifications, which are modifications issued by the government, and we'll get into that a little bit later in this presentation. The ACO reviews contract sales criteria compliance, and the ACO locator can also be found at the Vendor Support Center. Again, if you're on that main homepage, just scroll all the way down and you'll find the ACO locator if you're ever wondering who is the ACO on your contract. Next slide. All right, the third GSA representative on your contract is the IOA, which stands for Industrial Operations Analyst. And you will not hear from the IOA as frequently as your PCO or ACO, but your IOA does conduct contractor assessments, and they provide general guidance and business development support. The IOA locator can be found on the Vendor Support Center. Again, it will be on that main homepage. Just scroll all the way down and all of the locators are right there. You can find out who is your contract's PCO, ACO, and IOA all in one spot. So next slide. All right, so I just talked about IOAs, and now we're going to talk about IOA compliance assessments. And we're going to go into some detail about these assessments and what they are and what they entail. Next slide. IOA compliance assessments are virtual assessments, so they are not in person typically, and they may be conducted annually or prior to the end of the contract term. And the purpose of the assessment is to assess compliance with your scheduled contract. Contractor assessments are one of the primary ways that GSA will assess the level of compliance with your contract. The assessment will review compliance with multiple focus areas, including sales tracking, pricing, TAA, scope, basis of award for non-TDR vendors, GSA Advantage, catalog, price list, and administrative compliance. Something important to keep in mind is that IOA compliance assessments are not audits. They're very different. The compliance assessment is designed to help you, not to catch you in anything, and to improve your compliance. So the compliance assessment is, during the compliance assessment, the IOA will address your concerns or questions and evaluate processes and procedures. And the IOA will also provide education and training, share marketing resources. And again, the assessment is designed to help you as the vendor to maintain compliance with your GSA schedule contract. Next slide. All right, so now that we've talked about IOA compliance assessments, we will delve into the heart of the presentation here and discuss contract compliance and how GSA and vendors can ensure that schedule contracts remain compliant. Next slide. This slide is a little busy, but it does outline the responsibilities of GSA and federal agencies to maintain compliance. And it also outlines the responsibilities of the vendor to maintain compliance. So if you look to the left side of the slide here, it lists all of the responsibilities of GSA and eligible agencies. And so you'll see that GSA and federal agencies must abide by the FAR, the Federal Acquisition Regulation, and agency regulations. Ordering entities must abide by contract terms and conditions. Ordering entities can set aside orders under your mass contract. And again, the GSA PCO has ultimate authority over the MAS contract. Now, on the right-hand side of the screen are listed the responsibilities of you as the vendor or the contractor. So the vendor must extend MAS contract to all eligible customers per the GSA order. You must maintain compliance with GSA terms and conditions and task order level terms and conditions. Now, if the MAS contracts terms and conditions conflict with the task order level terms and conditions, then the schedule contract terms and conditions take precedence over the task order level T&Cs. You also must obtain $25,000 in contract sales during the first 24 months of the contract, and then maintain $25,000 every year thereafter per the contract sales criteria clause, which we will get into more detail about in the next slide. Next slide, please. Excellent. All right, so we just discussed IFSS 639 contract sales criteria clause, which requires you as the vendor to obtain $25,000 in contract sales in the first 24 months and then maintain $25,000 in sales for each year thereafter. The clause also states that if reported sales are under $25,000, the government may cancel the contract in accordance with the cancellation clause. And the cancellation clause gives either party, vendor or government, the right to cancel the clause for any reason, cancel the contract, for any reason. So if the contract is not meeting the minimum sales required, then typically your ACO will contact you to discuss this via email. I also will note, this is very important, that due to COVID-19, there is currently a temporary moratorium on canceling contracts for no or low sales. And I believe this is extended until September 30th, 2023. So this moratorium is in place at this time. It is unclear whether or not this will be extended, and you do still want to be aware of this clause for if and when the moratorium is lifted, and you are still encouraged to make effort to obtain sales against the contract. Next slide. So next up, we will cover sales reporting and IFF remittance. And this slide is split into two sides. Which side you focus on is determined by whether your contract is TDR or non-TDR. And TDR stands for transactional data reporting. And it is something that you would have opted into or not opted into, either during the offer process or via a mass modification. TDR is not available for all SINs. It is only available for specific SINs. If your contract does not participate in TDR, then it's considered non-TDR, or it's also called legacy sometimes. And you would focus on the left side of the slide. And I will go over that now. So non-TDR contracts are required to submit sales reports on a quarterly basis. And quarterly sales reports are due within 30 days after the end of the quarter. For the quarter ending June 30th, for example, your sales report would be due July 30th, not July 31st. Again, it's that 30 days. So you want to watch that on the months that have 31 days. The IFF must also be remitted within 30 days after the end of the quarter. So the sales report and the IFF are due at the same time for these legacy or non-TDR contracts. Now, if there are no sales during the quarter, a sales report is still required to report 0 sales. This is really important for new vendors to be aware of. If your contract award date, for example, is a couple weeks before the quarter end, you still will need to submit a sales report even if you don't have any sales. And that's true throughout the life of the contract. If you have no sales, you still need to submit that sales report, and preferably in a timely manner. Another item to note is that you should not report open market items and travel costs. Okay, so now we will take a look at the right-hand side of the slide. If your contract participates in TDR, this is relevant for you. TDR requires monthly sales reporting of line item transactional data, and it is due within 30 days after the end of the month. So it's not quarterly sales for TDR contracts, it's monthly sales. Now, For TDR contracts, the IFF is still due quarterly, but you do have the option to pay it monthly if you would like to. And similar to the legacy contracts, 0 sales must be reported even if you have no sales for the month. And again, this is important for new vendors to note. Even if you have no sales, a sales report is still required and you would report 0. And again, similar to the legacy contracts, you do not report open market items or travel costs against your GSA contract when you're reporting sales. Those are not included. Finally, I want to note for both TDR and non-TDR vendors, take a look at the bottom of the screen. This is where you'll report sales and remit IFF. It is a link to the FAST sales reporting portal, and the link is provided. GSA will send email reminders to submit your sales reports. They usually come from your ACO. We do ask that you please make an effort to submit your sales on time because your ACO will definitely appreciate it. Next slide. All right, next we'll cover what is a GSA sale. It seems like a simple or silly question, but it can sometimes get complicated. And this is a common question that can come up for new vendors, especially. The first bullet point here gives a link to the GSA order OGP 4800.2i, and this order clearly defines which organizations are eligible to buy off of your GSA MAS contract. So that's your first starting point to see if you have an eligible user. And if you're not sure if a user is eligible, check this list first. If you still are not sure, consult your ACO, your administrative contracting officer. Now, the second bullet here has a helpful link to a vendor support center page or VSC page that can help you determine if a sale is reportable. And here's some more information from that. Any one or more of the following may indicate that a sale is a MAS sale. So the sale does not have to meet all of these criteria, but it may just help. Any of these may indicate that the sale could be against your contract, your MAS contract. So if the product or service is on your GSA contract, including items sold under the order level materials, OLM SIN, if the GSA contract number is stated on the purchase order or task order, that's usually a sign that the order would be against your GSA schedule contract. If the ordering information and terms like delivery are the same as your GSA contract, that could be an indicator. If the customer contacted you through Advantage or GSA eBuy, that's another clue. If the customer pays with the government-wide commercial purchase card, that can be an indicator. And also if pricing is at or below your MAS negotiated price, and if there is no indicator of any other procurement vehicle being used. So a typical rule of thumb that we like to say is that typically if a contract item is sold at or below contract price to an eligible user, it is assumed that the GSA MAS contract vehicle was used. The contract number does not always have to be on the order. If you are unsure if an order is against your GSA contract, ask the ordering organization whether or not they're using your GSA contract for that order, and be sure to track that information in writing. Make sure to keep it in your records just in case that question comes up again. Next slide. So now we'll talk about order level materials, or OLMs, which are ancillary or supporting supplies or services that are acquired in direct support of a task order or BPA placed against a schedule contract. So OLMs are items that are not on your GSA schedule contract because the need for them was not known at the time that your schedule contract was awarded, but then they are needed to actually support the task order. Keep in mind that OLMs cannot be the primary purpose of the order. They can only have a supporting role. And OLMs are authorized only if the OLM SIN is awarded under the schedule contract. Now, the OLM SIN would have been awarded by mass modification. For newer contracts, this happens immediately after award, either the same day or the very next day. If you don't know if your contract has the OLM SIN, you can check it out on the GSA e-library site. If you just go to the GSA e-library site and you search your own contract number with no dashes, it will give you a list of SINs on your contract. And if you have the OLM SIN, you will see it listed there as OLM under the SIN list. Now, some other things to keep in mind are that the Trade Agreements Act applies to the OLM, and the task order level CO must make a fair and reasonable determination for all OLMs, so for all order level materials. The task order level CO must also follow any required ordering procedures based on the dollar amount of the OLMs. And the cumulative value, the OLMs, must not exceed 33.33% of the total value of the order. So that's very important to keep in mind, that 33.33% ceiling right there. There was a lot of excitement when the OLM SIN was released several years ago because it does increase the flexibility of the GSA schedule contract. Of course, there are still some items to keep in mind when it's used, but it does make the GSA schedule contract that much more flexible and agile. Next slide. Next up here, we have the basis of award. And this is relevant for quarterly reporting vendors only. So it's not for TDR vendors, it's for non-TDR contracts or legacy contracts. The basis of award is often, but not always, synonymous with the MFC or the most favored customer. It can be a specific customer or it can be a category of customers, such as all commercial customers, national and corporate accounts, etc. The basis of award is determined at contract award, and it can only be changed via modification. The basis of award is the discount relationship that determines your GSA pricing. And it's very, very important to note that you must maintain the discount relationship between your basis of award and your GSA schedule contract prices. If you disturb this discount relationship by giving your basis of award a better discount than what you disclosed at the time of your contract award, then you violate the price reduction clause and you need to notify your PCO immediately. Price reductions violations must be reported to the PCO within 15 calendar days. And federal customers are exempt from the price reductions clause. So we don't compete against ourselves, but you do need to constantly be monitoring the discounts that you're extending to your basis of award and be aware if that changes, because that will disrupt your schedule contract. Next slide. All right, let's move on to pricing. Your GSA contract is awarded with specific prices. However, you can always charge your GSA schedule customers a lower price than what's awarded on the schedule contract, but you can never charge a higher price than your awarded schedule contract prices for your schedule customers. The IFF stands for Industrial Funding Fee, and it is 0.75%. It is built into your contract prices. So it's built into the prices you proposed on your price proposal template. When you report sales, you must report the sales total. Please don't try to do any additional math. Don't add 0.75% to your prices. Don't subtract 0.75% from your prices. When reporting sales, you just report the sales total and the IFF will be calculated based off of that. Another item to keep in mind regarding pricing is that before charging freight or restocking fees, you want to verify if that is allowable in your contract. Schedule contracts are typically FOB, so freight on board delivery. So freight is typically not allowed. So if you are going to charge freight or restocking fees, verify if that is allowed by your contract. Also notable about pricing is that price increases must be approved by your PCO, and it would be based on what EPA or economic price adjustment clause that you have in the contract. It may be either IFSS 969 or 552.216-70. And IFSS 969 B1 encompasses automatic escalations. And so this is typically an annual automatic escalation, and it would be incorporated into the original contract at award or via subsequent modifications. Now, the other option is one-time increases, and these would be required to be incorporated via a modification. It would not be automatic, and that typically happens if you have the EPA clause, either 552.216-70 or IFSS 969 B2. So just be aware of what EPA clause is within your contract and how you can either request price increases or if they will automatically occur based on the anniversary date of your contract. Next slide. Okay. Next up, we have prompt payment terms, and a prompt payment discount is also referred to as a PPD sometimes. A prompt payment discount is a discount offered if a customer pays early. An example of what a prompt payment discount might look like would be 3% net 15 days, meaning that if the customer pays within 15 days, they would receive a 3% discount off of the price. I should note that 15 days is typically from the receipt of invoice or the acceptance of the item. Typically, any prompt payment discount on a contract will have been negotiated and agreed upon prior to contract award. It's really important to note that if you have a prompt payment discount on your contract, your awarded prompt payment discount terms must be displayed on all of your MAS invoices. So all of your invoices must display your PPD terms. Also with prompt payment discounts, they do not apply to government purchase card payments. And just to note, the terms of your prompt payment discount can be included in all MAS quotes or quotations, but note that they must be included on the invoice so that the customer is aware of the prompt payment discount that they could take advantage of. It's also important to note that prompt payment discounts cannot be substituted for other concessions. So they are a term and condition of your schedule contract, and they will take precedence. Next slide. All right, so let's take a look at the scope of the contract. And scope is important because contract items and services must be within the scope of the schedule and within the scope of your approved SINs that you have on your contract. And SINs are special item numbers, SINs. Only items awarded on your GSA schedule contract can be sold as GSA contract items and services. Anything that's not on your GSA schedule contract would be considered what they call open market. And if you do sell open market items, they must be clearly identified as such, unless they qualify as order level materials. But you do want to be clear on any of your quotes, invoices, all of the documentation to your customer. If there are any items that are not on your contract, you want to make sure that they're marked appropriately as open market. Also regarding scope, you want to keep an eye on labor qualifications if you do have services on your contract. And when labor categories are awarded under an MAS contract, They are awarded with a minimum education and a minimum experience requirement. You must fill the labor categories with personnel who meet this criteria. And if the personnel do not meet this criteria, then that is a scope concern and a violation. And that is something that will need to be addressed by your PCO. So it's very, very important that you make sure that the personnel fulfilling the roles have at least meet minimum education and the minimum experience requirement. Next slide. All right, here we have the Trade Agreements Act. And the Trade Agreements Act states that contract items must be manufactured in the United States or a TAA compliant country. TAA is applicable to all scheduled contracts, and this includes services. You might be wondering how this applies to services. In regards to services, the firm must be established in a TAA compliant country. If you're looking for the list of TAA compliant countries, it can be found under FAR Part 25.003. You are responsible to notify your PCO if a non-compliant item is discovered or if the country of manufacture changes. So if you become aware of a change or an issue, please notify your PCO as soon as possible so that it can be addressed. And we also recommend that you review your contract items frequently, and that way you can determine if there are any issues with accuracy or with TAA compliance. Next slide. Okay, so this is the NDAA Section 889, Parts A and B. And this is really important for supply chain risk management. I'll first go over Part A, which prohibits the government from purchasing telecommunications and video surveillance equipment or services manufactured or provided by the following companies. And this includes their subsidiaries or affiliates. And they're listed there on the screen. First, Huawei Technologies Company, ZTE Corporation, Hytera Communications Corporation, Hangzhou Hikvision Digital Technology Company, and Dahua Technology Company. Next slide. And this is Part B of NDAA Section 889. Part B prohibits the government from contracting with an entity that uses telecommunications equipment or services as a substantial or essential component of any system or as critical technology as part of any system produced by any of the companies listed on the previous slide. It should be noted that the use that is prohibited is regardless of whether that use is in performance of a federal contract or not. And Section 889 Part B applies to every sector, no matter what your company makes or sells. Section 889 Parts A and B relate to representations that you need to make in sam.gov when you register or renew your registration in sam.gov. To give just a little summary here, for Section A, you state whether your company does or does not provide the prohibited telecom, and for Section B, you state whether the company does or does not use the prohibited telecom. So please be sure to do your research and answer these questions correctly, as it is essential to keeping a safe supply chain. Next slide. All right, next I want to share some information about the Verified Product Portal, or VPP. For products, in lieu of a letter of supply, authorized manufacturers and their wholesalers can fulfill the letter of supply requirement instead by providing authorization information and detailed product content within the portal, within the VPP here. And this helps with standardizing product information so the same manufacturer part number is used throughout. The VPP is voluntary and free to use. I also should note that letters of supply are still being accepted for items from manufacturers who do not participate in the VPP. but the VPP does take precedence over a letter of supply. So the VPP is the ultimate authority over that letter of supply. And here on this slide, there is a link at the bottom with more information and how to access the VPP. Next slide. The next topic here is authorized FSS price list and GSA Advantage. This is a schedule contract requirement that vendors must have an approved current price list loaded into GSA eLibrary. If you need more information about how to format the price list, please review Contract Clause IFSS 600, and the price list must list your contract terms and conditions. For awarded services, please note that labor categories, rates, and labor qualifications must be defined in the approved price list that's loaded in Advantage. And this price list is available to be downloaded from GSA eLibrary once it's uploaded by the vendor and approved by the GSA contracting officer. So keep in mind for awarded products and software, the item information should be uploaded into GSA Advantage. And for assistance in loading items onto GSA Advantage, please contact the Vendor Support Center. And the contact info is listed here on the screen at the bottom. Next slide. Next up is E-Verify, and E-Verify is a system in which employers electronically confirm the employment eligibility of their employees. All contractors are required to enroll in the E-Verify program via the website listed here. So you can take a look at that link now or when you receive the slides if you're interested in reviewing the E-Verify program. Next slide. And finally, we are on to our last compliance topic here, administrative compliance. GSA schedules or GSA schedule contracts require ongoing maintenance in order to remain compliant. Please pay special attention to the following administrative concerns. Be sure to keep your GSA Advantage or eLibrary price list updated. You want to make sure to update the price list when any relevant mods are awarded. And those relevant mods could include addition mods, deletion mods, changing your prices, etc. As for novation and change of name agreements, if your company name changes, a novation or a change of name agreement is very likely required. So if you do find that your company name changes, please contact your PCO to discuss further, and a modification will likely be required, but your PCO can provide additional guidance. More information about name changes and novations can be found in the FAR, the Federal Acquisition Regulation, Part 42. And a novation occurs if there is a change of ownership, whereas a change of name typically occurs only if the company's name is changing. But if there is an ownership change, then typically a novation would be required. I'll also note for bankruptcy, in the unfortunate event that the company enters bankruptcy proceedings, you do have certain contractual responsibilities. And the most important one is to notify your PCO within 5 business days. For more information about bankruptcy, please refer to FAR Part 52.242-13. And finally, on this slide, the System for Award Management, or SAM, is the official US government system that consolidated the capabilities of what was formerly known as CCR/FedReg, ORCA, and EPLS. For SAM, your registration is required to be renewed annually, and expired registrations will stop payment from government customers or will impede payment from your government customers. You must have a current SAM registration in order to submit a modification request on your multiple award schedule or MAS contract. And I'll also note that SAM fairly recently switched over from DUNS numbers to UEIs, unique entity identifier. So within SAM, each entity should have its own UEI. Next slide. Now we will move into our last section here, and we will discuss the two groups of modifications along with point of contact information. A modification is any change that's made to your FSS contract, and modifications fall into two groups, those initiated by you, the contractor, or those initiated by GSA. Next slide. First, we'll talk about mass mods. And mass mods, so this is MASS mods, are typically a GSA-initiated modification issued to all schedule contractors. Mass mods are released when a uniform change occurs schedule-wide. When a mass mod is released, an email notice will be sent out to all of the authorized negotiators. But I should note that only authorized negotiators who have the authority to sign designated to them in our system can take action on the mass mods. Mass mods now use multi-factor authentication to log in. There is a user guide on the mass mod homepage if you need more information about setting that up, just to keep things more secure. If it is your first time reviewing a mass modification, you need to first register in the system before logging in. So if it's your first mass mod that you're reviewing, your first time taking a look at a mass mod, make sure you click on that register button instead of just trying to sign in. All mass modifications require a response, so you must take action. Some of the mass mods are optional in terms of whether you agree to the change. This is rare, but it can happen. So for example, when TDR, the transactional data reporting was implemented, vendors needed to take action on a TDR mass mod, but at that time they could choose to either opt into TDR or they could decline to join TDR. But they did have to make a decision and respond to the mass mod and take action on it. And it's a similar situation with the OLM mod, order level materials. You can decide to add the OLM SIN to your contract, or you can decline to add it. But again, you do need to take action on that mass mod so that it's not pending. Something really important to remember with mass mods is make sure you read what you are signing, because mass modifications are binding changes. Typically, the mass mod is released with a summary of added, deleted, and modified clauses. So this will give you an idea of what's being changed. Next slide. What are eMods? eMods are contractor-initiated modifications that are used for multiple purposes. So it can include addition, deletion, and pricing. And after this type of mod is approved, you want to be sure to update your eLibrary price list and your GSA Advantage. This is a separate step after the mod is awarded. Another type of eMod is administrative. So for example, a change to an authorized negotiator or a change to an email address. Other types of eMods could be technical, legal, terms and conditions. We talked about novations earlier. That's a type of eMod. So an eMod is required to make a change to your contract. There are also SAM-initiated modifications, and these are typically for address changes. So if your company's address changes, what you should do is update the company address in sam.gov. And when sam.gov updates, then GSA's system automatically generates a modification to ensure that your address in GSA's system matches what's in sam.gov. All eMods are completed at GSA's eMod website, which is eoffer.gsa.gov. And there are helpful links to guidance and an interactive help center, which can guide you through the process to submit an eMod. You may want to connect with your PCO before you submit an eMod to let them know what to expect. And they may have some questions for you, or you may have some questions for them. So you may want to just give them a heads up before you submit an eMod. Next slide. We frequently run into situations where vendors' points of contact need to be updated. Perhaps someone left the company or someone joined the company or someone retired. So there are a few different places to enter these updates. To update the points of contact on your GSA contract, for the headquarters address specifically, you want to update sam.gov, and once SAM has been updated, you will be prompted to verify the auto-generated EMOD. To update the authorized negotiator, say phone number, email address, and office address, this would be updated using the corresponding EMOD, so the authorized negotiator EMOD that you can submit through that website, eoffer.gsa.gov. And let's see. For contract administrator updates or for IFF point of contact changes, your ACO can assist with these changes. So just reach out to your ACO. You can send them an email or give them a call and tell them that your contract administrator or IFF POC has changed, and they can help you out with that. We also often get the question of how to update the points of contact in GSA's eLibrary or GSA Advantage. That can be a little tricky to change, but first you want to view your company's profile to verify whether or not the information listed is accurate. If the telephone number, email, address, and web address need to be changed, that can be updated using the SIP program or EDI, depending on what you use to load your file onto eLibrary or Advantage. And GSA eBuy contact info can be updated under your profile on eBuy. So you can update your eBuy information under your profile. Next slide. All right, so we have covered a lot of information today. Here's a resources slide with some useful links and resources that coincide with the topics that we discussed today. When you receive a copy of this presentation, you can click directly on the links in these slides to get more information. Next slide. We will also be sending out a one-page resource document. My team worked hard to consolidate all of the most helpful links and put them in one place for you to refer to. On both this slide and the next slide, we have a preview of what this resource document will look like. And when you receive it, it will be a one-page document with lots of great links for you to check out and get more information. So next slide. This right here is the second half of the preview. And again, you will receive this document in a one-page format. So you can bookmark it or save it on your desktop, on your laptop, so you can refer to it at any time. Next slide. Okay, we have some upcoming GSA ITC training. First, we have one on March 9th. That my team is putting on. So if you are interested, you can click directly on the link once you receive the slideshow and register for that training. The second link there is for future GSA trainings. And if you go to that link, you can see all of the different trainings that GSA is offering and whether any of them interest you, and feel free to sign up for those that do. Next slide. This completes the training portion of this session. If you did not get to attend this full session or you want to hear this information again, we will be giving the same training a few times this year. This training is also being recorded. However, for us to post the recording, it will probably take about a month. So please keep in mind, the recording will take about a month before it's completed, posted, available, and visible. So you can either wait for the recording to come out if you'd like to see this again, or you can sign up for one of our other sessions that we will be giving over the next few months. If you have a question that we don't get to today, please note the email address on the screen. You can submit that question to the email address, and that email inbox is actively monitored. We will check it and we will get back to you with an answer. We are also going to post a poll right now. If you could please take 1 minute to answer the poll And at the same time, we are going to end the recording. So please